my whole life has been this constant daily journal where it's like, what are my strengths? What are my weaknesses? I've seen so many people come in this industry and fail and they couldn't make it. And so sometimes I ask myself, like, why me? Like, it was a big dream. And it didn't seem unobtainable, but it seemed like a pipe dream. It seemed like 0% shot, but let's give it a go and see where we land up. And when I made my first million, that was like a really stark moment in my life where I was just kind of looking in the mirror and people had known my name and people had seen my journey and all the trades that I've taken. I was very public and transparent through this whole process. People can trade in the pre-markets. I don't. There's a lot of edge in the pre-market. There's no shame in trading in the pre-market. It's just not for me. My strategies are all based off market dependent hours. So about 9:30 is when I start making my first trades. Just because you can be right does not mean you should be right. Just because you can make money does not mean that you should make that money. Because there's ways to make money that reinforce bad habits, that if you took that trade 9 times out of 10, would you make money? What is the probability of actually making money in this scenario? And it takes time to actually realize this, but you have to really ask yourself, what is your edge? What is your probability of being right? What is your probability of seeing good risk reward, right? And flipping bias on the dime like that, if there's not like a setup that you can quantitatively define as a setup, then it starts to border on the lines of gambling.
I have you here today, and I wanted to sit down with you in person because, first of all, that energy, you know what I mean? That 7-figure trader energy is contagious, so I want to be around it, right? So that's one thing. All right, ladies and gentlemen, we are back. I got my man Mike Huddy in the building. Mike, what's up, brother?
How you doing?
How you feeling, man?
Really good.
Yo, so a little confusion getting here. You went to one location, I was at another, had to pick you up, but that gave us some good time to just chat and just get readjusted to each other. So how you feeling, man? Back in Miami?
Yeah, back in Miami. Just spent a month in Europe for all of July, then spent that month in LA, and now I'm kind of making this move to New York. So you actually caught me at a good transitional period where I'm packing up my stuff from Miami and moving it to New York literally next week.
Wow.
And I just want to say that I'm happy to be here and happy to do this face to face. And I love talking trading. I love all things markets. So I'm sure it's going to be a good conversation.
Yes, sir. So we talked about that in our virtual interview, how you had always had the dream of living in Manhattan, doing that whole experience. Yeah. So it's finally happening. How you feel, man?
I had to make some I just had to get in. I want to live the ideal New York lifestyle. I want to do it by my terms. But push came to shove. I'm not a huge fan of Miami, believe it or not.
No offense taken, by the way. No offense taken.
No offense to Miami. I think Miami's a cool place.
Yeah.
And I think there's a lot of fun to be had here. But it's not for me. My people aren't here. I've had a hard time, assimilating. So that's kind of my cue to pick up and move.
Yeah.
So I just pulled trig. I'm someone that believes in taking massive action. If you want something, go get it. And you're going to have all these reasons as to why, these walls that you build to tell you why you can't do something or why something's not possible. Just do it, So one day I just kind of woke up. I was sick of Miami, and I called my buddy up and I said, "Hey, is there a unit below you?" He's in a big building, and he said, "Yeah." I said, "All right, give me the application. I'll move in end of the month."
Wow.
So now we're there.
Yo, when I'm in Manhattan, I'm gonna hit you up. I'm gonna holler at you, man. You can give me a tour of the city. I have you here today, and I wanted to sit down with you in person because, first of all, that energy, you know what I mean? That 7-figure trader energy is contagious, so I want to be around it, right? So that's one thing. But talking to you in the car as we journeyed over here, it really brought something into perspective, right? You're not that guy that is like so fixated on the money. You're just the guy that's like, yo, if I can knock out little bits and pieces here and there, I'll eventually cut down the tree, right? And I love that perspective because that is kind of how I am. I don't need to be the biggest trader on the block. I don't need to be the guy bringing in the huge payload in one trade.
Sure.
But if I can just knock out like what I would normally make working a job in a month, if I can knock that out in a day, consistently knocking it out, I can live the life I want to live. Talk to me about that perspective.
Yeah, and so that's the floor. The floor is to make sure your expenses are paid and that you're making just like a decent income. And that's what's nice about trading. But the ceiling is what is really going to get most people excited, and it's definitely there at all times, and the potential is there, and that's what makes day trading so lucrative. It's you're going to have these very basic layup type setups that are going to make you your consistent money, hopefully if you're a consistent trader. But sometimes there comes a version of your A+ setup that is better than the rest, that is more developed than the rest, and it has the potential to make you 25, 30, 50K in a day, 100K, whatever the number is, multitudes past your average winner. And that's the ceiling approach, where it's like you can come to the market every day and you can get your minimums paid for, but there's always that potential to make a lot more money in that single day if the environment, the setup is ripe for it. So that's what's really nice about day trading. The other side of it is it's a competitive sport, in my opinion. I mean, there's no athleticism necessary, but it is competitive. You're competing not only with others in the social media world, but you're also competing with yourself, most importantly. You want to see progress. You want to grow as your account grows too. So a lot of what I do and what I love about trading is the sport. And I'm here to do it every day. I've been doing it every day for 8-9 years because I wake up every day and I'm excited. I don't have a job where I'm like, crap, I got to go either lose money or make money. I'm very excited to create that money, to find where the opportunity is, and then execute my trade plan, execute my strategy, and make sure that I get that money.
Mm-hmm. So when you come to the market every day, are you floor approach or ceiling approach?
I think I'm floor. I'm definitely floor. I'm here to bat a modest day. I mean, I'm a firm believer that $1,000 a day is good. It is good. I mean, obviously not every day can be $1,000, so there's going to be losses entitled to that, but $1,000 a day is not horrible, right? It's better than most people are living on in the world, right?
You better believe it.
And I think that's relatively easy to achieve without a whole lot of money at risk. So I wouldn't say that's my minimum. Like, I like 4K days. 4K a day is about $1 million a year and 252 trading days. Mm-hmm. So that's where I like to average. And then I like my exceptional winners to be in the 15, 20, 25K range. And then I like my losers to be in that $2,000 to $4,000 range.
I can live with that.
Yeah,
I can definitely live with that.
I don't have stress. Like, people ask me, like, is my job stressful? And the way that I play it, it's really not. It's a rinse, wash, repeat process where every day I know exactly what I'm doing. I know exactly how much I'm betting. I know exactly what my worst loss is going to be. And I know exactly how much I expect to make, give or take. And that lets me trade from a place of calm. And I'm not really like reaching for the stars. There's another way to do it that is a lot more on your mental, where it's like you go to sleep at night and you have a $45,000 loss, and the next day you got to go make that money back or lose it again. Yeah. And that's where you can kind of put yourself in the stressful state. And I've been there, I've done that, I've tried these things, 8-9 years. Like, in my more beginning days where I was more of a gunslinger, yeah, I just wanted to make as much money possible and put as much money on the line. But after months and months and months of doing that, like especially in 2022, I just kind of stared at the wall, and most days I was depressed. Mm-hmm. Because it's, for me, again, some traders don't have these feelings, but when I'm up 15, 20K on a stock and it hasn't reached my target yet, and it's a lot of money, like physically it's a lot of money, but in the market it's kind of different. When that comes all the way back down because you have to kind of wait for your plan to be hit, or at least adhere to some risk level, it's depressing. You're like, oh man, I was up $25,000 and now I made only 2, or I lost 10, or I lost 5, whatever the result was. That's hard for me to stomach. Whereas if I'm like up 4K and then it goes away, I'm like, okay, whatever. Like, that was a nominal amount of money. Like, I can live without 4K, right? Where it's like 25K in a day, like, now we're talking real means. And it's hard for me to separate, which is, again, a personal thing. It's not for everyone.
It's amazing to me, right? How you can identify like your flaws that some may think are flaws, that may limit you to your earning potential, but at the grand scope of things, you've made like over 7 figures in profits. Yeah. And I think that's the focal point, right? If you can do something every single day and be consistent with doing it, and over the grand scheme of things, look at your portfolio and be like, yo, I've done in this period of a decade of trading what some people will achieve in a lifetime. That's crazy.
It is crazy, and it's surreal. And I remember when I first started, like, it was it was a big dream, and it didn't seem unobtainable, but it seemed like a pipe dream. It seemed like 0% shot, but let's give it a go and see where we land up. And when I made my first million, that was like a really stark moment in my life where I was just kind of looking in the mirror, and people had known my name, and people had seen my journey and all the trades that I've taken. I was very public and transparent through this whole process. And I couldn't believe that it was me standing in the mirrors looking at myself saying like, oh my God, you did it. And I watched, I was in chat rooms, right? There was 500, 700 people. I've seen so many people come in this industry and fail, and they couldn't make it. And so sometimes I ask myself, like, why me? What separates me from the rest? Because I'm not anything different than anyone else in this room or anyone watching this. I am a normal person. I had a 2.5 GPA in high school. I got into some college. I did better in college, and I found work ethic, and I've developed myself. And to your point, my whole life has been self-reflection. My whole life has been this constant daily journal where it's like, what are my strengths? What are my weaknesses? And how do I strengthen my strengths and make sure my weaknesses are where they are and not try to like work on necessarily those. Let's just try to do the things that I do really well even better. And so, and that's what stock trading is. Like if you're not the trader that's reviewing their trades every week, every month, reviewing the market sentiment, what's running, what's moving stocks, why are stocks moving, why am I losing, psychological factors, all of these things play a huge role into how you're gonna come to the market and execute every day. So psychology is like one of the most important things to being a successful trader. More than, identifying patterns really good, managing risk is really important, but also understanding psychology, not only of yourself, but of other players in the market. And that all is just reflection, daily journaling, whether it's to yourself, whether it's mental, whether it's physical on a piece of paper, you have to do these things.
Yeah. Walk me through your like trading week routine. So you start up, so are you trading on a Monday or do you have any like rituals where I don't trade the first day of the,
I trade every
week?
day.
Okay. All right. So walk us through.
Monday is usually like a day where it's like, okay, let's see where the money is. Let's see how the sentiment is, where the appetite of traders are. I have a couple setups that are not necessarily discretionary. They're purely systematic. They're data driven. It's something that I've run models on. And if I do it consistently over time, it'll make me money.
Okay.
So those are rinse, wash, repeat setups. I come to the market. If the criteria is met and it's setting up in a certain way that would end up on my data sheet, I take that trade no matter what. And that's kind of like my daily income. The other stuff is just kind of keeping a pulse on the market. You know, this past week and a half, we've had a bunch of monkeypox stocks running because monkeypox is having an outbreak and the WHO is saying that there's cases in the US. And it's probably not like COVID, but we've seen with COVID, with SARS, MERS, all of these outbreaks, even Ebola, stocks run, these typical vaccine stocks that are horrible companies that never really make a product. They start putting out all these PRs, press releases to tell people that they either have a new testing kit for COVID or in this new circumstances, they're getting contracts for their treatment of monkeypox or whatever it is. And some of them are real and some of them aren't, but it creates a lot of movement in penny stocks. So this whole past week was monkeypox. So anyways, you're asking me what my routine is. I don't want to get too much on
Bro,
a tangent.
you give us whatever you can give us. Come on, brother. Keep it going.
So Mondays are usually like what's been moving, where are people placing their money, what price ranges are hot, what sectors are hot. That's like an information day, and that'll kind of guide me for the rest of the week because traders are short-term memory people. They have recency bias. So if something worked yesterday, they want to do the same thing tomorrow.
That's facts.
So you can capitalize off that type of mentality. You can know where the crowd's going to be and whether you're long or short based off the individual ticker. You can create a plan. So I'm usually waking up just to start my day. I usually wake up. Let me get my time zones right. It depends. So I grew up in Los Angeles. Yeah. I started trading in Los Angeles.
Give us LA time.
Los Angeles and San Francisco. So part of the reason I got into the market was because I was sick of sleeping in. I wanted to wake up at 5 a.m. I wanted to make my money by 8 a.m. I wanted to go to the gym by 9 a.m. I wanted to be healthy and I wanted to be essentially rich or just have money in my pocket. And by 11 a.m. I want to like assess the field and say, okay, now what? My enemies are still asleep. All my stuff is done. What can I do now with the rest of my day? So I started waking up at 5 a.m. And the reason I say all that is because that's kind of stayed with me ever since. Like my body does not wake up at 5, 6, 7 a.m. now because it's just got an automatic clock. I've been doing it for so long. In the beginning, I would sleep in and I'd be hungover, whatever it was, and I'd take a huge loss on a trade. So now my heart just wakes up because it's like, I wouldn't say scared. It's just, maybe it's excited. It's just like, how is the chessboard laid? What's gapping up? What's moving? How are my stocks doing from the night before? So I'm always kind of excited at 5 a.m. So now I have a 5 a.m. wake up is what I'm trying to tell you. I don't think that's necessary, but I wake up about 5, 6, 7 a.m. on the East Coast. On the West Coast, it's the same thing. On the East Coast, I have enough time to go to the gym, get some stuff done before market open, probably sit down around 7:30 and 8, and just start idly watching the market. I'm starting to gather information, what's gapping up, what are the press releases, what are the share structures of these stocks, what are people talking about in the chat rooms, did I miss anything, just gathering all the information for the 9:30 a.m. open. I generally don't trade during the pre-market. I think there's a lot of edge in the pre-market. I think there's a lot of strategies that can be employed, and that's the thing about the market. There's so many ways to make money. I used to call it a candy store. You can eat so many different pieces of candy at your choice. No one's going to tell you no. You can push that button on any single stock, and there's two different buttons to push, short or long, right? But if you push short or long on every single strategy, you're going to get a stomach ache. Just like if you eat every single piece of candy, you're going to get a stomach ache. So you have to be disciplined and specific to only eat your favorite kind, to only eat the one that you know makes you feel good, or to take it off the analogy, to know that makes you money, or makes you lose a little and makes you win a lot. Those are always kind of the best. So what I was saying is people can trade in the pre-markets. I don't. There's a lot of edge in the pre-market. There's no shame in trading in the pre-market. It's just not for me. My strategies are all based off market dependent hours. So about 9:30 is when I start making my first trades. I'm checking in with the chat room, making sure everyone, knows my plans for the day, knows my watch list for the day. And then 9:30, I kind of mute everything. I put my phone aside. I want full focus on what's in front of me. I'm not trying to talk to people as I trade. I'm not trying to update every single little thing. I'm focused on making money because that's priority number one in this moment. I probably do that until about 11 a.m. By 11 a.m., I've had most of my positions are entered. Some maybe even covered up and completely done. And some are more time weighted. Some are more like I have specific times of days where the data favors I cover the stock or I hold it for another day or whatever it is. So usually the first hour and a half is button pushing time. Middle of the day is chill time. So if I'm on the West Coast, I'm going to the gym. If I'm on the East Coast, maybe I'm pulling up YouTube or I'm pulling up my emails and I'm just kind of distracting myself from the market. I don't like making decisions in the middle of the day. And I'll tell you guys why. In the middle of the day, a lot of liquidity leaves the market. So you have more random moves. You have Wall Street on lunch. You have just things like that, right? So people are it's not as chaotic as it is in the first 2 hours or in the last hour of the day. So I don't like making decisions in the middle of the day. I want to capitalize when it's volatile. And when it kind of gets illiquid and sideways, I'm either holding for a patience plan or I'm not holding through that period because I probably hit my goal for the day already on that specific stock. So that all kind of goes by middle of the day about, I'm gonna switch back to East Coast now. 2 p.m., 2:30, like last hour and a half, 2 hours of the trading day, I'll come back. I'll run the scans. I'll see what's been moving that day. So I'm generally scanning for big percent gainers, trading the most volume. So whatever's up the most on the day, trading the most amount of volume. Generally, I look for stocks underneath $10. That's my pool. I don't want to see every single stock, right? I don't want to see every single stock trading volume. There's tons of blue chip stocks that are trading hundreds of millions, billions of shares of volume every day. I don't want those. I want the active ones in my small candy store with my niche candy. So I make a list of all those tickers and they'll be on maybe day 1, day 2, day 3, or maybe they're part of a sector and they're setting up in a consolidation pattern, and I'll put them all on a watch list and say, okay, these are all the stocks that I'm kind of watching for. They're not all immediate, but these are what I'm going to gather from this week, and they're probably going to be on this watch for like a rolling period of 2 or 3 weeks. As they set up, as they go through their cycle of volatility, and then I'm just picking my spots on these stocks as the days progress.
Yeah. You mentioned that you will jump into the chat and see what people are talking about.
Yeah.
Like, does that not influence you in any type of way negatively?
It used to. I mean, there was a moment where I swore off chat rooms. After I became self-sufficient, I kind of realized I was better than the chat room, because the chat room has so much noise and it has so many outside opinions that it can start to influence you in your plan.
Correct.
And whether it's someone you respect or it's just crowd speak, you can start doubting yourself. And the thing about the market is 90% of traders lose. So if you're actually agreeing with the crowd, there's a chance that I'm actually right and they're wrong.
Yeah.
And at the end of the day, I'm never going to see that result through because I'm letting outside forces impact my trading, which is, again, why when market opens, I put my phone away. I'll get text messages. I'll put my Discord away. I'll get Discord messages. And I want to focus on my plan and I want to execute. And at the end of the day, I want to be wrong or I want to be right. I don't want other people to be wrong or right for me, right? I want to make sure I'm doing the necessary due diligence. Now, where I think chat rooms are good is there are some smart people in chat rooms. People that know that, maybe a stock has a horrific offering, or maybe they have earnings that day, or maybe there's a conference call, or maybe, who knows, right? There's a number of examples that I can give. Maybe there's a buyout rumor. All of these variables are events that I want to know about, and I have the means to finding out, but sometimes I'll overlook something, right? So that's where I think chat rooms are really important. But at the same time, you got to be careful of the crowd speak, the peanut gallery that just want to that just want to watch people trade for the sport of it, like it's a coliseum. They want to see you take big losses. They want to see you win, and they want you to hear their opinion about what you're doing.
Yeah.
And I just don't need that, right? Like I don't. Again, I kind of said I'm better than the chat room, but at one point I knew how to make money. And I'm looking at everyone else in the chat room. All of our profits were there. I could see how much money these people had made, and I could see how much money I had made. And I said, to myself, who am I to listen to these people? Why would I be listening? And even to some people that had made millions, it's like they didn't agree with my opinion, but it's like, unless you're telling me something that's truly something I overlooked about my trade, I really don't want you to influence my agenda. Now, I think there's a difference between having a close personal pod, right? You can have, like a chat room is usually like 100, 200, 500 people, whatever it is, right?
So random traders on different levels.
Exactly. Everyone, and you don't know any of them. Now, out of that group, and this is kind of how we started our group, you're going to find some badass people, some people that are really either their opinions are congruent with yours, or you're seeing them trade and they're taking the exact same trades as you, and maybe they're doing it better, or maybe they're taking a trade that I want to have taken, but I don't really understand the setup. And those are the people I started asking questions to. So, these names are like Jack Kellogg, Kyle Williams, Dominic Mastromateo, Tim Grittani, Roland Wolf. These are all 7-figure traders now. And when I first got started in the chat room, we were all nothing. We were all, I was like one of the first people to get to 6 figures in trading. And then the rest of them, slowly got up there. And those are the people that I started to reach out to, and they reached out to me as well. And we started to create little Discord communities of like the 4 or 5 of us, because we also understood that, hey, we're playing with the same deck, we're trading the same setups, we all have strengths and weaknesses. Some people do some parts better, some people do other parts better, and combining that headspace, it can be good. As we've talked, it also can lead to huge losses. When everyone's on the same side of the trade and everyone has the utmost conviction, those can be really disastrous scenarios, and we've kind of put ourselves in that scenario before. So yeah, I mean, that's kind of my process with the chat rooms.
Yeah. So you talked about forming this pod of, you got Kyle, Dom, and so many other great names you called out. So talk to me about this setup, right? This overextended stock, first kind of red day and things like that. So yeah, like what was the epiphany around this setup that hit home for you, and why is this simple setup so effective?
So it has, I would say it has morphed over the years. And when I first got started trading, and I still trade it often, when I first got started trading, it was the only thing I traded. So what was the inspiration? There was a DVD, it still exists. It's called Trading Tickers by a guy named Tim Grittani. And when I first got started trading, he had already made like 3 million, and he was like maybe 26, 27, 28 years old. And when I watched his DVD, there's live trades. He goes over the setup, and then he shows himself trading it live, respecting everything he's just taught you in the DVD, and you see him make $30,000, $40,000, $50,000 per trade. It's pretty freaking cool. Or lose. He also has some losses in it, so you see both sides of the equation. And so that DVD was very instrumental in my beginning days, because that's actually what put me on to the first red day. In his DVD, he called it the overextended gap down, which consisted of a stock basically going on, I'm going to make it as easy as possible, a big 3-day run, kind of a threshold would be like 100% from day 1 to day 3. Each day it gaps up, gaps up, gaps up. And that first time it gaps down is a trend reversal. So every day it's green, and then the next day it's green, and the next day it's green again. Maybe it's gone from $2 to $8 in those 3 days. And then, on day 4, it closed at 8, and now it's opening up at 7. So it's gapping down, 10, 15%.
And that's your signal.
That is my signal to say this is kind of the outline of the strategy, which is longs have been bullish. Every day they're green, they're green, they're green, they're being rewarded, they're being rewarded. But now we're at a circumstance where you're holding and hoping, and the stock might not go much further. And with penny stocks, or stocks in the $2 to $10 range, gravity does take effect, and you can eviscerate a lot of those gains in an hour or 2 hours. It can drop like a rock quite quickly. And so why does that happen is the question. And this is what always spoke to me. The psychology, like I said, about traders, it matters. It makes a lot of sense to me, where it's like you get in on day 1, and maybe it's like a first screen day, and it's got a good catalyst, and it's got good volume, and it's got good price action, whatever it is. So all the longs get in, and it gaps up the next day. And they're going to put good money after good money. They liked it the first day, and it's holding the same way in the second day, and they're going to do it again. And then on day 3, they're believing shorts are absolutely enamored with the stock. They keep getting squeezed. It's going to the moon. It's going to 1,000. I mean, you saw it with GME just recently. And that first time it gaps down, it's kind of like a trend reversal for all these longs. They're like, hey, every day I wake up and I'm up on my money. I'm up on my money. I'm up on my money. I want to keep buying. I want to keep buying. I want to keep buying. What happens the one day they wake up when they're not up on their money? What does that do to their psyche? They don't want to keep buying when they're red, when their profits are going down. They want to do what? They want to sell. So when you have a crowded stock going up and up and up, and it's that first time it's turning trend, it's a situation where you have a supply and demand imbalance. You have a situation where all the longs that have been bullish are now either selling or they're not buying up here because it's up 2 to 8 example, so it's up 300% or so. Mm-hmm. So now they're kind of in their mind saying, how much higher is it going to go? And rationally speaking, you're not going to hit the buy button. Some people do, but rationally, like it should kind of consolidate, maybe pull back, maybe you'll get a dip. That's the mindset of a trader. Mm-hmm. So there's not a whole lot of demand up here. There's not a whole lot of buy orders going through. Further, if you've been kind of riding the wave, you're probably in a situation where you're more willing to sell and capitalize on your profit. So now you have a situation where there's little demand and predictably or foreseeably a lot of supply. Everyone's got to sell. And then you have the other side of supply, which is really what causes the real imbalance, which is the short sellers. Because now they're all, it's not a secret. This strategy is very well known. I have no problem talking about it, Now they're all piling on. So now you have, when a short sells, when a short goes through, it's a sell order. When a long sells his long, it's a sell order. So these are two different sides of sell orders coming in, and then you have a situation where the stock is super extended. So the demand is thin, and the supply kind of swipes through the demand, and you get this panic. Yeah. Because there's no buyers, there's tons of sellers from both sides, and you get this really swift drop. And in my beginning of the career, that is exactly what I was trying to capitalize on. It was that one moment where the buyers would give up, the sellers would pile on, and you'd get this like 10, 15% washout. And I would take the trade, and this is exactly what I would do. First time it was gapping down. Maybe I'd wait a little bit to get like some kind of spike in the market open just to give me better risk reward. But I'd get into the stock in the first 5, 10, 15, 20 minutes of market open. I would risk either the previous day's high or maybe where it closed, thinking like if it went back green, that's a bullish signal. If it broke to new highs, that's a bullish signal. And at this point, we're no longer on what we started to call it, which is the first red day. Mm-hmm. If we're green on the day, or if we're making new highs, I'm no longer in a first red day.
Correct.
We're getting squeezed. So that was kind of like thesis broken moment where it's like, okay, yes, I still think the stock is extended. Yes, I still think it probably doesn't belong up here, but it's not going to come down on my time frame. A lot of them do. Some of them don't. So take that loss if it happens, and if it doesn't happen, kind of ride out for that pullback, that consolidation at the lows, and then get out. And that's how I made my first probably like $250,000. It was specifically just waiting for extended stocks, multi-day runs. First time I see a trend reversal, get in and allow that psychological phenomenon to play out. And it was like a single hit. Like every time it was like I'm just trying to take a base run.
That's really good.
Yeah.
So naturally, right, a trader would be really led to, okay, I'm in this trade. I'm thinking it's going to reverse, but it's now pushing above the high. So it was pushing under, but now it's pushing back above.
Yeah.
And so you're thinking squeeze now. So a normal trader like myself would just, okay, I'm going to close this sale. I'm going to jump in for the buy. How are you able to stay disciplined to know I'm going to just take the loss and just move on to another instrument, or maybe just be done for the day?
So a lot of successful trading is checking your ego at the door. Mm-hmm. And it takes time to actually realize this, but you have to really ask yourself, what is your edge? What is your probability of being right? What is your probability of seeing good risk reward, right? And flipping bias on the dime like that, if there's not like a setup that you can qualitatively define as a setup, then it starts to border on the lines of gambling, where you start to think, I like, just because you can be right does not mean you should be right. Just because you can make money does not mean that you should make that money. Because there's ways to make money that reinforce bad habits, that if you took that trade 9 times out of 10, would you make money? What is the probability of actually making money in this scenario? And if you can't answer that question, Now you're at a roulette table quite quickly, and you're just betting on a number that can be right, but you don't know the odds, you don't know how often, you don't know if it's bankable. And you want to be in bankable situations 9 out of 10 times, where it's like you have the utmost confidence, you know the expected daily value of the stock, you know where it's going to land, and you can execute on that. So my strategy isn't when I'm wrong, this is all of a sudden a good long, because it could still stuff at the highs. It's still an extended stock. I mean, a lot of bad things can happen. The worst thing for me, what's more worrisome, is not shifting my bias. It's thinking that my risk was wrong and getting back in and trying to hit the stock again, which I do less and less of. But sometimes there's fake outs, right? Sometimes the market is manipulating the stock to go to my stop because they know that's where my stop is, and they're going to extract the liquidity from me and reverse the stock. So there are these games being played at all times. But to get back to your original question, I know that also buying where I'm getting squeezed does not make it a long. It doesn't make it a good squeeze setup. I have other squeeze setups. They kind of set up differently, and maybe this setup can become that after some time, but it's not usually that quick. So that's why I don't change my bias. I really have specific patterns that I sit there and I wait for. And most times for me, trading is boring. It's not fun. It's not this adrenaline rush, and it can be an adrenaline rush, but it's not like every 5 minutes I have a new trade idea. I usually come into the market open saying, these are my 2 or 3 stocks I'm going to trade today. There's a bunch of if-then statements surrounding those setups. And just because I'm wrong doesn't mean I get to flip my bias and then play the other side. Because again, would I do that 9 times out of 10? And the answer is no. I'll have other thoughts. I really don't know what this looks like 2 or 3 days from now or 2 hours from now. So I can't really make that decision on the fly.
Yeah. Just simple things like that, I think, is what separates the consistently successful versus the unsuccessful. Yeah. Just something as simple as just not having a reason why.
There is a winning trader in every single losing trader. That I do believe. And oftentimes to find success, it's very slight movements to the left. Like everyone's kind of right there, but you're not. And the reason you're not is because you don't have a coach holding your hand and walking you through the process and slapping your hand when you start to do that thing where the voice in your head says, don't do it, don't do it. And then something else comes in your head and says, do it. And then you click the button. And once you click the button, there's no takesies, backsies. I mean, once you're in, anything can happen and money's on the line, and now you have to manage whatever the situation you got into. And that can ruin a week. That very small decision can ruin a week. So, and here's the thing about trading, like you're constantly making decisions. All day you're deciding, don't do that, do this, don't do that, do this. What's the price action look like? What's the catalyst? What are they talking about? And you have to make all these decisions of whether you care or you don't care, or they mean something, or they impact your trading, or they don't. So trading is exhausting. And so you want to limit the amount of decisions you're making. You don't want to have to be making decisions based off every single minute candle you see. You want to have an idea of the big picture. You want to have an idea of where the stock is going, allow the minute by minute price action to kind of play out, and be there for the bigger picture result. And so a lot of times in the market is just about being focused, being disciplined, and again, back to the candy store, like not eating candy as often as you can. Oftentimes your best trade is the trade you're already in. So what will happen is you'll close out that trade, or not you, but anyone, and then they'll go looking for another trade. Immediately, you're gonna wanna push another button. If you made money, you wanna make more money. If you lost money, you wanna make that money back. So immediately you're looking for another trade. Meanwhile, maybe that trade you were already in is making you more money. Maybe there's parts of it you didn't understand about the setup, and there's more room for downside or upside depending on the side of the trade you're in. But that's not what we do. We close out that trade because we're happy with the profit, and then we go risk the profit on another trade. And so it's having the discipline to say, is this trade a setup? Do I have edge? Would I take this trade 9 times out of 10? Or am I just trying to get that endorphin rush again? Or am I just trying to keep busy because I'm bored? And the boredom trades are a real thing. FOMO trades are a real thing. Fear of missing out. The whole chat room or someone you respect gets long a stock. It's not your stock. It's not your setup. All of a sudden you're long the stock because you trust him. That's gambling. Because you don't know the implied edge. You don't know his plan. You don't know when his plan will shift, or hers, whoever the trader is. So now you're trading off misinformation. You're trading off a gut. You're trading off a feel. And far too many traders are going to make these gut, feel, emotionally triggered trades every day that they are traders. And all you're doing is bleeding by 1,000 paper cuts. And so how do we get that out of our trade? And again, like I started this, like have a coach. That's everyone's dream, but you can't have that because no one's going to sit there and tell you no. So those are the things you have to overcome. And this is why I say journaling is a big thing with trading, because you have to identify what are your triggers. What are the things you gravitate towards? What are causing you small paper cut losses that truly add up over time, especially if you're trying to compound an account. Like if you're not seeing growth, it's really hard to start believing. And if your growth isn't specific, it's very hard to start focusing in on the things that are working. Because if your results are random and you're trading randomly and you have big wins because you followed someone here or because you didn't follow someone, whatever it is, it's hard to target the things that are working. It's hard to really say, okay, this is where my money should be bet because this is where I have good risk reward, or this could have good results. You need to know those things in order to grow the business.
Yeah. Man, you just dropped the whole master class on psychology right there.
That's
seriously. So in terms of time frames, are you looking, well, now obviously the first red day like setup has evolved, right? But when you were doing it at the bare minimum, right? Was there a particular time frame you were using, or were you doing a top-down analysis? Like, how are you gauging those entries in terms of time frame?
Yeah, a lot of my time frame that I work on is the daily chart.
Okay.
And that doesn't really sound like a time frame because you're probably asking for a minute by minute or hour by thing. Yeah. But what I think gives me my context, right, is the daily chart. The daily chart shows me extension. The daily chart shows me verticality. The daily chart shows me overhead resistance or a story that can unfold that the stock has been doing something for 2 or 3 years. Like I have a lot of context by what the daily chart tells me. So the daily chart puts it on my map. The daily chart tells me I'm interested. And it's the intraday that tells me how much size and when to push. The intraday shows me my risk reward. So the daily chart says, here's a setup, it's valid. And the intraday says, okay, it's valid. Now, how much size are you going to put in and what's your risk? And that's what the price action will tell me. So when I'm looking at daily charts, I'm using daily, weekly, monthly charts. I want the whole picture. I want not just this year. I want the last 2, 3, 5, 10 years. I'll go back as far as the chart will allow me to. And I want the whole picture. And then when I'm zooming in on the intraday, I'm generally filtering between all the time frames. There's not really one specific that I like the most. For the most part, I like patience. So as the market opens, I generally have the 1 minute open, but as time progresses, as the charts get more developed, I switch to the 5, the 10, the 15. Again, I'm not really a big price action reader. Sometimes there are moments in the chart where I'm reading the price action and I'm trying to get an entry, but once I have my entry and I have my risk, now I'm just letting the chart play out. So now I want the time frame that allows me to be most patient, where I don't really want a 1 minute candle to scare me out of a big picture plan. I want this to do something for 5, 10, 15 minutes in a way that is uncomfortable, where I'm saying, okay, this is now not conforming. This is not really fading all that well if I'm short, right? So I want to, acknowledge this uptrend and just be aware of it. And in 1 minute, that's not a confirmed uptrend, right? That can just be a pop. That can be one person covering or one person selling, whatever it is. But if it's sustained on volume for 5, 10, 15, 20, 30 minutes, okay, this is really something. So let's, be aware of this. So that's how I do it. Again, mainly it's daily chart. In the first couple minutes, it's 1 minute. And then as the day gets bigger, I just let the candles get bigger so I don't get spooked.
I like that. That's very, very simplistic.
A lot of what I do is simple.
I love that.
Yeah, it's
I
not
love
too
that. I think it has to be.
Well, like I said, I'm an average person.
Yeah.
There's nothing that I do that really separates. The thing that I do well is I network. I network with traders really well. So I've met some really smart guys that have helped me define some edges. But really, like I said, I didn't create the first red day. That was Tim Grattani. Now, I morphed it to my style. I found ways that I enjoyed getting in certain situations or how I execute. That's all artistic. The execution part of trading is artistic, but the confines of a setup, that's more scientific. It's more, again, specific criteria. Does it fit the qualifications of the setup? That's all nitty gritty down to numbers.
Yeah. Your lifestyle right now.
Yeah. Less trading.
Yeah. I mean,
a lot.
Yeah, you're all over the place.
Uh-huh.
So tell us where you've been this year.
Okay. This year?
Yeah.
Started out in, it's gonna be hard to remember. Started out in January in Thailand. I like to go to Thailand at the beginning of the year to kind of have a reset, refocus type of mindset. I go there for mainly health. I go to a desolate island. There's really not a lot of civilization there. I eat super clean. I go to the gym every day. I listen to a lot of self-help and investment books. I just want to isolate myself and work on myself for about 5 weeks. I do this every year. I just considered, putting 10% of the year just into yourself is, again, part of the reasons that I got into trading is for the lifestyle, is for the sport, is for what it grants me on the outside of trading. It's not just about the money for me. So the fact that I get to go to Thailand, it's not that expensive. It's very reasonable. I can make the money in a day to do the whole freaking trip for a month. And that's really not saying much, which is why Thailand's such a great place. But it's also a super health conscious place. They feed you the right things. All the gyms are, the gyms I go to are immaculate. They're like 5-star gyms.
Wow.
So I go there and I have, I'm like spacing on the word, but when a 5-week resolution where it's like I take 5 weeks to jot down my resolutions for the year. What do I want to accomplish? So that's what I did this year in January. I'm doing it again next year in January. Mm-hmm. February rolls around. I think I was in Miami. March rolls around. We like to do these in-person boot camps where, much like we're in person right now, we like to go in front of a room full of 50 people. We do 2 days of presentation over the weekend, and then Monday we do live trading for everyone, question answer, cocktail hours. They're really fun. We get to actually put names to faces to the screen names, and you kind of talked about it, the 7-figure motivation.
Yeah.
Like I've had lunches with other 7-figures traders who have been out of the market, and they have lunch with me and they're like, man, you like I want to get back in the market. I want to start trading. And like this happened in June, and the guy made like $700,000 in the next 2 months. And
That's amazing.
He's a badass trader. But he was like, he's like, dude, we have to get lunch again because the way you speak, like it makes me want to trade. So that is getting back to our in-person boot camps. It's just putting all of it together in real life. Like trading is such a lonely space. It's you versus yourself versus the computer and a chat room. So when you get to actually meet these people in person, not only teach them, but also hear their inspiring stories of how they got started and where they are and have a drink with them and whatever it is, we enjoy that process, right? So we did that in March in New York. I like to stay longer than just the boot camp. So I probably stayed for 2 weeks. March, April and May was like kind of wedding season for me. For a lot of, I'm 29 years old. So wedding season, I was in Scottsdale, I was in Los Angeles, I was in Palm Springs, just kind of going from place to place, living at the various homes that I either occupy or own. And then...
you can do that.
Yeah, you can do that. You can do that. And so yeah, that was March, April, May, June. A lot of that was in Los Angeles. Really like those months for Los Angeles. So predominantly my home place has been Miami this past year. And so in the summer I go to Los Angeles because it's too hot for here. I don't like the humidity. And then in July we went to Europe. Europe is pretty cool. So every year I do a Europe hiatus. I generally don't like trading the Europe months. I think we talked about this.
We did.
This summer has been better than most. But a lot of Augusts for me have been break-even months. So instead of breaking even, I like to go on a boat and lose $5,000 or whatever it is. Like I'd rather spend the money than work for a month and make $0. Now, not every August is zero, but a lot of them are. So anyways, this year we did, me and my girlfriend, we did the south of France. Her family lives there. We went there for 12 days. Then we sailed around Turkey for 12 days. Turkey is a absolutely beautiful country. A lot like Greece. It's got beautiful waters, beautiful food, beautiful people, beautiful beach clubs. My favorite was Bodrum. Had a really good time there for a couple days. And then we left there, and I've been a 10-year veteran of Mykonos. Some people will find that gross. Some people will find that awesome. I find it somewhere in between.
What is that?
Mykonos is the party island of Greece.
Okay.
So you've probably heard of Ibiza.
Yeah.
Ibiza is the party island of Spain. Mykonos is the party island of Greece. Bodrum is the party island of Turkey.
How wild does he get over there?
It's wild.
Come on.
I would say Ibiza is more wild. I think if you like I'm a social guy. I can do the clubs, but I'm kind of over my prime of going to the clubs till 4 a.m. and doing whatever you do at the clubs and getting back and waking up at 11 hungover as hell and then doing it all over again. Like it's starting to weigh heavily on my body. So, but that's what Ibiza is. Ibiza is like a nonstop. Every night there's a club name, whether it's David Guetta or this or that. DJ Snake, whoever it is, right? There's always a performer and you're always at a performance. In Mykonos, it's not quite like that. There are performers, but there's also like chill beach clubs. There's chill bars, the harbor. You can just like go around having drinks, talking to people on the streets. So it's more social. And less like you have to stay up till 4 a.m. More it's like you can go to bed at 2. You can stay up till 4. I've done 9 a.m. nights there many nights back in my prime, 10-year vet. But now it's like, okay, 2:33, 4 o'clock rolls around. Like, I want to not be dead at the beach tomorrow. I want to have a pulse, you know? So that's what Mykonos is. It's a great place. I think the Greeks are great people. They laugh at my jokes. That's really important. Some nationalities, I talk really fast. I know this about me. I make a lot of jokes. Sometimes they just don't click. Yeah. And the people are just like, dude, this guy's weird, or this guy gives me the heebie-jeebies. But the Greeks, they like me. I like that. So,
are you bilingual?
I can speak Spanish.
Okay.
Conversationally. Mm-hmm. My grammar probably sucks, but you know, I can get around. I can get out of an arrest. I've had to do that before in complete Spanish.
Hey, listen, when you got to get out of a situation, all things come out you, right? You never know what abilities you have.
So yeah, I'm a little bilingual. I mean, okay. I wouldn't put it on a resume. I wouldn't like go to apply to like a call center and say, yeah, I can speak Spanish, because that would be misleading.
We know you're not applying anywhere.
No.
We know that.
Yeah, I mean, that's what was kind of cool. You know, when I first graduated college, like I had 6 months until I graduated, and I wasn't profitable for 2 years. So out of my 8-9 year career, it started in 2015. The first 2 years were unprofitable. That was all about survival. That was all about just like see all that you can see and just be here for the game, and just make sure that like once you understand, that's when you start betting the money. So for my first 2 years, it wasn't profitable. And then it was like 6 months till I was graduating college. Mm-hmm. And I had a finance and economics dual degree. And I was like, man, if I don't get this, I have to go get a 9-to-5. I have to be a portfolio analyst, an economicist. I don't even know. But it all gave me the heebie-jeebies, because I'm not like, I don't think I'm a 9-to-5 guy. Mm-hmm. I mean, I did sales before. We talked about this on the previous. I did sales before stock trading. So I've always been kind of like a social, like in the field type of guy, a business owner type of guy, not a guy that's in the office all the time. Definitely not a guy that's on Excel sheets, stuff like that. That's not me. So the idea, and this is, again, one of the strengths, like where I work well is when there's a fire under my you-know-what. When I'm motivated, it's like this or nothing. That's when drive comes into me, and I can reach my goals. But when there's no pressure, when there's no burning sensation, well, then you can kind of push it off. You don't have to take it seriously. And that's probably why it took me 2 years. I think that's an average amount of time before someone truly starts to reach, you know, good levels of money or consistency. But it can be sped up with the right mindset, I believe. But then it was my last 6 months of trading that it was like, oh my God, you have to go get a 9-to-5. And that's when the fire was lit. And that's when I made my first 6 figures. And it was in 6 months. And I think the week I graduated, I made $20-something thousand on a trade. Ticker was LFIN. I'll never forget it. And it was that moment where I was like, oh my God, Huddy, you will never have to get a job. You will never have to get a job. Now, that's kind of a lie, because I still like to be productive. I like to build businesses. I like to own businesses. I like to create money. I like to create value at all points in life. Mm-hmm. So day trading is just one means of income. And that's short-term income. But I have long-term income, which takes consistent phone calls. I have accounting, which takes consistent phone calls. I have businesses. I have real estate. All of this amounts to a job. Every day I have a to-do list, and I have things to get done. I'm not just like make 2 trades and then go sit on the couch, smoke a bunch of weed, and play Call of Duty for the rest of the day. Mm-hmm. Now, that does sound great, but that's not necessarily what I want to fulfill my days with, at least not at 28, 29 years old anymore. So, you know, I avoided the 9-to-5, but I still have means of productivity. And I think that's important, because if your brain starts to sleep and you're asleep at the wheel, you're not going to make $1 million. I'm sorry.
You better believe it.
You need stimulation. You need outside stimulation, and you have to find it somewhere, right? And generally the answer is not the couch, the bong, and the Call of Duty. There's probably a place for all of that. I'm not saying like, you know, have your relaxation, have your work-life balance, but understand that if you're not putting in the work at all times, then when you get to the market, you're not going to have that mental stimulation to nail a trade. Does that make sense?
It does.
Okay.
It definitely does. As you started to make money trading, what are some professional people that you've had to add into your life in terms of, tax strategists or accountants and different things like
That's
that?
an interesting question.
Yeah.
The main thing is probably an accountant. Accountants are really good. You got to apply for things, and I'm not an accountant, so obviously speak to an accountant when you do this. They're the ones that are registered, they're professionals. But registering for things like traders tax status or understanding things like the wash rule, again, things that aren't too important in the beginning of your trading career, but eventually will become important. Opening up LLCs under your name, like, again, not important in the beginning, but can be important later on. So those are all professional services that I had to hire out for. I've also hired professional coders. So I'm not a coder, I'm not a statistician. I'm more of the guy that builds the framework and the psychology behind the strategy, and then we'll tell the statistician or the coder how to implement this into something like Polygon, right? Where they can build out equity curves, they can build out risk reward ratios, so I can truly understand the math behind the trade. Those guys are interesting guys to find, or girls, and hire. So those are predominantly, off the top of my head, the two professional services I've hired that are person to person. I buy things, right? I have scanners, I have news sources, so I have some professional tools that help me become a better trader. And that's pretty much it. It's not high, like the thing that's the capital intensive part about trading. It's not the setup, it's not the tools, it's not the professionals you have to hire. It's really, again, it's you versus yourself. It's the money you're going to lose if you're not educated, if you're not prepared, and if you're just gunslinging. That's going to be your biggest capital loss, right? My first 6 figures when I was in college, I was trading off a $100 laptop that I bought from Best Buy. So the secret's not in the setup. Now, you can have 2 screens. You can have more real estate space in terms of, desktop screen space. It's not necessary. You don't need to watch 9-10 stocks every day. I mean, at least for my style, I just need the one. I just need the 1, 2, or 3 generally, right? So I haven't. The money doesn't get spent on that stuff. The money gets spent on losing if you're not, detailed.
Yeah. Before we close out, I want you to, first of all, if there's anything that I didn't ask you that you want to share, or that you just feel like, man, I just feel like I want to say this, first of all, I want to give you an opportunity to do that. But if you don't have anything, I do want you to speak to a person that is very intrigued about trading. However, the ads, the over consumption of showing money and saying that I'm a day trader, that's being heavily, marketed online around day trading, period, whether it's Forex, stocks, futures, whatever the case may be, crypto. That person that's just kind of lost, like they want to do it, but they don't know what's real and what's fake.
Yeah.
What advice would you give that person?
So to answer your first question, I really don't have much to add, mainly because as we were going on, I kind of did my best to circle back on the thoughts that I had. And we went back and we went through them. So you let me talk a lot. And I think that's really
that's
good
what
on
I
your
want you
part.
to do.
Yeah.
I don't want to talk. I want you to talk.
Awesome. And what I'm just trying to say is I think I got everything off my chest. And hopefully we can do more of these in the future. And
Definitely.
There's always something new that pops in my mind. I have kind of that squirrel brain, ADD type mentality, which I think is a blessing, not a curse. And so, you catch me in the next 10 minutes and I'll have another spiel on something, that's always good to hear. So nothing else to add. But your second question is really interesting because I want to speak to this person because I truly think that the life that I've created for myself at such a young age is what everyone should have. I want everyone to be where I am. Like the way I live on a day-to-day basis is really freaking cool. I've completely beaten the game called life at an early age. Now it could still go bad. I'm not saying like I'm immune. I could still F up in a number of different ways, not just in the market, but in life. You can F up and you can lose everything. So I can't say that I've beaten the game, but I've gotten out of the rat race. I've cracked the code at a very early age, and that's the first thing. Like college will not get you to where I am, right? Like that is the first person I want to speak to. Like if you are not thinking about college, I think day trading is an interesting thing to explore because you don't necessarily need an education to do this. Now, you need to be smart. You need to be intuitive. You cannot be a knuckle brain, because if you're a knuckle brain in the markets, just like getting detention in school, you're going to lose all your money. So just because I want this for you doesn't mean you can achieve it. It is not guaranteed for everyone, and a lot of people are going to lose. That's what the statistic is.
Yes.
But for those that are above and beyond in some way or another, I don't know what those traits are. Like I said, I don't know what differentiates me from other people. I think this is a great avenue, right? Now, there are a lot of hurdles to overcome. There is a very steep learning curve. Most people are not going to overcome it, right? So I think one of the first things you have to understand is you have to have marathon, not a sprint type of mentality. This is not some get rich fast scheme. You're not going to pick up a trading DVD and in 3 months start making 6 figures. You're not even going to start making money. So the first thing, if you're like new to trading, the first thing you want to focus on is consistency.
Yeah.
X's and O's. O's are rights, X's are wrongs. How many O's can I stack together in a row? And in the beginning, during this process, it should be as little of money as possible, because you're not here for the profits yet. You're here for just to prove that there is a way to consistently win. And once you find that you're consistently winning, that's when you can start putting money in, but that's after you've built a process. There's a love-hate relationship. There are days where I love my job. I find it's the best. There are days where I hate my job. I just wish I never did it, and there's no avoiding that. What makes me want to keep doing it over and over and over again and deal with the hate and acknowledge that it's there, but also acknowledge that the love is there too, is the lifestyle that it grants me. Truly the freedom to do whatever I want, whenever I want, wherever I want. I can trade and I cannot trade. And that is truly a surreal feeling when I'm hanging out with other people and they have jobs, they have obligations, they can't do this trip or they have to do this, and I don't have to deal with any of that. And that's what, I don't know many other jobs out there that allow that kind of freedom.
Yeah.
So that's something to work really hard towards, right? I truly believe that. It's basically like some people ask me, and when I don't want to explain to them that I'm a stock trader, people ask me, like, what do you do? I tell them I'm retired. And it's really just for conversation. Like, I think it's kind of weak to say that at 28, 29, I always forget how old I am. I'm turning 30 in October. I think it's kind of weak to say that you're retired. Sometimes I say it's summer retirement or whatever it is. And mainly it's because I don't want to explain what I do on a day-to-day basis. I don't want to do a whole interview with someone that I just met, right? But sometimes I do feel retired because really a good trade has to pull me back in. So there are days where I don't make trades. There are many days that I don't make trades. And I wake up, I check the market, it's not there, and I leave. And I have the understanding to say, okay, it's not there for me today. Move on to the next day, right? And so those days, I'm semi-retired for the most part. So those are some quick tidbits that trading is going to make you aware of your biggest flaws in life. It's going to bring out your worst flaws and your great flaws, right? Kind of like a relationship. If you're a greedy person, it's going to show you you're a greedy person. If you're fearful, it's going to show you you're fearful, right? And learning a lot about yourself are demons that you're going to have to face and demons that you're going to have to overcome. Again, all of that introspective reflection that you're going to have to constantly be doing. So this is not for everyone. Like, if you're not okay with losing money and making money and volatile days, and if money means a lot to you and stuff like that, then it's going to be tough. If you are risk adverse, I think it's going to be tough. I actually think there's a unique playground where risk averse people can actually do really well in day trading. And again, that's just understanding the data and the numbers. Like, once you understand what the real risk is, again, like a novice generally is gambling. So they don't really know what the real risk is. They're going in unknowingly. But some risk averse people like understand what is max loss and what is max gain, balance the equation and understand that there's not real risk there or it's mitigated, right? But just know what you're getting signed up for. Understand that it's going to take a while. It's not a get rich fast scheme, and it might take multiple years, and you're going to have to go through the trenches. And at the end of the day, it might mean nothing. It might mean a lot of things, but there's always this analogy of a guy digging through a tunnel, and he's digging, and then he's gotten like a mile or something, and it's taken weeks or months, and then he's sweating, he's done, he gives up, and you X-ray vision the tunnel, and on the other side, just one more click are the diamonds. But he gave up right at the finish line, right, and never saw the diamonds. So that's kind of the stuff you have to be prepared for. And I wish everyone the best of luck because, again, like I've seen so many traders come and go. I don't know what it is about the ones that learn process, that learn discipline, that learn check your ego at the door, that learn how to focus, manage the risk, size in properly, identify what a pattern is. If you can do all those things, you're 90% of the way there. And then it's just reading the market. And the last thing that I'll say is there's nothing that will shortcut screen time. So in my 9 years of trading, I say I take days off. That doesn't mean I don't look at the market in the morning. I'm every day, and in my 9 years, towards the end, maybe there have been some slack off days, but in the first 5-7 years, I was there every day.
Every single
and if I didn't have a trade, I would discipline myself to not trade because I have to learn how to do that. And yeah, so just showing up every day, getting screen time, whether you make a trade, whether you lose on a trade, whether you miss a trade, whether a trade comes and goes and you didn't want to trade it at all, there's always something to learn. And so making those mental notes, making them physical, and just compounding those building blocks of knowledge, right? You have your knowledge account and you have your money account, and you have to build both. And they kind of both grow at different levels. First, the knowledge account has to grow. Then the money account has to grow. And the only way to grow the knowledge account is by screen time, is by showing up and being accountable.
That's fire, man. Come on, man. Ladies and gentlemen, Mike Huddy in the building, people. Man, so much fire. Just fire emojis all over you right now, man. Yo, this has been really, really good. And I just really hope, like myself, that you guys were able to just soak in these nuggets, replay this as many times as you need to. Again, like, I just can't just run away from the fact that you are somebody that is living the lifestyle, that is actually doing it, have the proven, verified results. And this is very rare that people like yourself are just, hey, like putting it all out there, you know, and that you're offering your services, because you don't have to do it. You know what I mean?
But we love doing it.
There you go. There you
know,
go.
like I said, like one of the other things you have to have is a love and obsession for the game.
Yeah.
And it's like, I like having these conversations. I like talking to people about trading stock. This is my world. One of the first things I did is I put myself out there as much as I can, in-person events, whatever it was. I wanted to talk about stocks. Again, I wake up every day excited about my job. So that is why I do it. It's truly from a love.
And man, we appreciate it, man. Mike Huddy. Before we get out of here, though, Mike, I want you to let us know where we can follow you. And if any trader is interested in learning how you're trading or join some of those boot camps that you talk about, let us know how we can get plugged in.
Absolutely. So the first place you're going to want to check is clovertrading.io on YouTube. One of the fun things we do, we're constantly on YouTube. It's all free. So if you want to get to know us, get to know our trading style, that's the first place to go. We're clovertrading.io. We do a segment called Good Morning NASDAQ, where we talk about the gappers in the morning. We also do a segment called Wine Wednesday. Wednesday night, we all get together. We have a glass of wine. We invite some other 7, 8-figure traders onto that broadcast, and we just talk about the week, talk about what's in play, talk about, you know, trading is such like a small space. So it's like good to hear other people going through the rhythm and the motion, right? Past the YouTube stuff, clovertrading.io is our website. We offer the DVD, like I talked about, Tim Grattani's DVD. We sell it for him on our website. We also have chat rooms and stuff like that, so you can find us there as well.
Nice, man. Hey, big shout out to Dom and Kyle as well. All right. But man, Mike, again, thank you so much. Ladies and gentlemen, Forex Beginner Podcast, Calvin here. Listen, we look forward to running into you at the bank one day, but you cannot meet us there. You got to beat us there. When we pull up, you should be walking out, duffel bag on your shoulder, big smile on your face. That's our friendly way of saying, I believe we all are going to be successful. Till next time, God bless you. Take care. Peace. Boom. That's the right way to end. My man.
I forgot the